want to welcome everyone to Financial Accounting. Today we're going to cover the transactions and how it affects the various accounts. And we have the assets equal to liabilities plus owner's equity. Assets are things that the company owns or have control over, such as cash, accounts receivables, supplies, equipment, land, buildings, vehicles, that type of thing. Liabilities is simply the debt that the company has, which is the most common one is accounts payable, and there's a lot of other ones we'll add later. And then equity is made up of four parts. Common stock, and common stock represents the investment by the owners. Dividends are subtracted off because dividends is a payout of what the company paid to its owners. It's kind of a revenue distribution if you want to look at it. Revenue is what the company has earned by selling off its goods and services, and expenses is what the company has encountered to generate that revenue. Okay, so that's what this is. So we're going to look at these transactions and how it affects the various accounts. I did the first one already. On January 2nd, Samantha Jones started a print shop, printing business. We're going to call it the print shop, which I don't have up there, but it's set up as a corporation, and she invested $25,000. Well, we notice I have cash here of $25,000 because the company received the cash. So we're going to increase the cash, and we want to increase the common stock because we give that out to Samantha. So both of them are $25,000. Then also on the 3rd, on January 3rd, the company paid $2,700 for supplies. Okay, so that's a minus $2,700, and we want to increase supplies by $2,700 because the company purchased supplies. And this balance is just simply the two added together. And now what I'm going to do is add the two together. I'm going to keep it all the way across. Anything that has a number in it, we need to add. Okay, actually these rest of them are going to be zeros, but I'm not going to worry about those. Okay, and you notice here we have 22,300 plus 2,700 gives us 25,000, which that means that still equals 25,000. Then on the 3rd, also the 2nd, January 3rd, we paid $800 for office space or for space. So since we paid it, that's a negative cash amount. And for office space, that will increase our rent. So then we add these up, 22,300 plus the negative 800. And bring the balances across that we have here. And now you notice we just have to make sure we're in balance. So we have 21,500 plus 2,700. If we add those up, that gives us the 24,200. And on this side we have 25,000, but you notice that's a minus 800, so that gives us 24,200. So we're in balance. On the 5th, the print shop paid $12,000 for equipment. Again, the word paid's in there, so that's a minus 12,000. And we bought equipment. That's an asset, so we increase assets by 12,000. So we add these together, and then we bring them across. Like I said, remember if it's, I think on a lot of the homework, if there's nothing in there, you have to add a 0, otherwise it's going to count it wrong. But I'm not going to worry about it on this one right here. Okay. On the 8th, we collected and received. Keywords. If you collect it, you receive it, and you receive it, or you received it, that means the company you received cash. Okay, and that's for $600. So we want to receive cash, and this was for work that we completed. Since it was for work completed, that will be for the revenue account. Okay, so then we add these together. 95 plus 600, and then we copy these across, and it takes longer and longer to do this. Okay, and if we do the same type of thing, we notice this side added up equals 24,800, in case you can't see that right there. And on this side we have 25,000 plus 6 gives us 25,600, minus 800 gives us the 24,200, but 24, yeah. Whatever it was, 24,800, yeah, 25,600 minus 800 gives us 24,800. Okay, on the 10th, we purchase supplies on account. Here's another key word, on account. that means you charged it. But what did we receive? We received supplies, and on account means we charged it, so now our accounts payable is $300. Okay, so now we add these up, and now you always add the last two columns together. Of course, there's nothing in it, it makes it easy to add. And then you keep bringing these across. And if you add these up, that equals to 25,100. And then we have 300 plus 25,000 gives us 25,300, plus 6 gives us 25,900, minus 8 gives us 25,100. So we're still in balance. On the 15th, we collected, let's see, we didn't collect, we billed a client, okay? Keywords billed, so that means we did not collect it for $250. So that gives us $250 in accounts receivable because the client owes it to us, and revenue will increase by $250 because we've earned it. So then we add these up, plus the 0, just add everything together, going down. Like I said, this takes longer to do it this way than it does before you do it manually, but that's okay. All right, 18th. Paid for supplies purchased January 10th. Okay, well, January 10th up here, we notice we've had accounts payables of $300, but we paid, so that's a minus 300. Now, we don't want to reduce supplies because we didn't do that. What we want to reduce is our liability because that's what we no longer have. Okay. So then we add these together, plus 300. And add them all the way across. Now I notice that's 0 now because we no longer owe it. And I got carried away there, but that's okay. I can do it that way. Yeah. There we go, 800. Okay. And we add them up again. This is just a quick check. That gives us the 25,050. And we have 25,850 minus 800 gives us 25,050. So we have the same number. Okay. 21st. Collected and received. The bill from January 15th. January 15th was the 250. So we collected that. Accounts receivable, which means that guy would probably like to say that he no longer owes it. Okay, so 9850 plus the 250, and then we add these across, all the way across, just like we had before. I went ahead and did it. Okay, it's easier that way. Oh, here we go. Hit the wrong key there, sorry. Okay, 30th, paid dividends of $200. This means we paid Samantha $200 for dividends. So since it's paid, that's a minus 200, and our dividends will be increased by $200. Okay, so equal to add these up again. Okay, and then all the way across. And now, oh, I keep hitting that wrong key, don't I? All right. What we can do now is double check everything. So we're going to have all of our debits. So this is 9850 plus 0 plus 3,000, 12,000. And I'll highlight these and get them formatted. And then what I want to do is add this up. And that gives me 24,850. Then to compare that with, I'm going to add up my liability side. I have 0, 25,000. That's a minus 200 plus 850 minus 800. Add these up. You notice it's going to give me the same number. I'll get these so they're in the same format so you can see it better. Okay, so we're in balance. So this is how you record the transactions based on these accounts here. You go to increase or decrease the accounts. You have to look at what accounts are affected and how does it affect the accounts. Does it increase the account or decrease the account? And look for keywords like collected or received. That means they paid you the cash. And if it's on account, that means that you charged it. Okay, so that's the keywords you want to look for. So hopefully this helps you out a little bit. And this is the analysis to start off with the analyzing the accounts. Okay.